Hi there, this is Anthony from Admin Inc., and I'm coming to you with another episode. I'll be talking about bank facilities. The reason why this is important is because you have to know that beyond the world of eBay and PayPal um, and Cash App and all these payment tools that you use, there's a bigger world. And as a business, as it grows, it will be attractive to banks because the bank is going to invest in success stories, in succeeding ventures. So if you're a business and you're succeeding, then the bank wants a part of your business. So they would offer you different kinds of bank facilities, a way to use banks' money to make money, and it's usually not a very expensive partnership. So you would be on the winning end of it because it's basically it would constitute about probably at max maybe 25% of your profits. So basically they give you the money, you work with their money, and you pay them only a quarter. So it's basically they invest everything and they get just 25%, which is a great thing. I mean, at max. And there are other different kinds of bank facilities, but there are other ones that are even cheaper. So let's start with the first one that everybody knows about, which is called the line of credit. A line of credit is an amount of money that is extended to the business, and the business would use portions of it and pays interest on that. An example would be $1 million line of credit, but you'd be using like $5,000 to buy a certain tool, and then if that is all you have used for 1 year, then you pay interest on the $5,000 as you pay it back, and you would have $1 million of line of credit that's renewed for your use for the next year. The second thing, which is also available for you if you are a good business and succeeding business, you would have something called letter of credit facilities. So they would allow you a certain amount of money in letter of credits. A letter of credit, it deserves an episode all by itself. It's a mode of payment whereby the buyer's bank promises the seller's bank to pay money for the merchandise of the seller. So the seller has a bank, the buyer has a bank, because the seller want to receive the money in his bank, the buyer want to pay the money from his bank. So bank to bank promise buyer to seller is called a letter of credit. And letter of credit has so many forms. We're not going to get into that. But a letter of credit also is a guarantee that there is money for the product that you're selling me, that you're sending me. And this is very important because we're talking about millions and millions of dollars of products. You cannot sell them with PayPal. I mean, you need something of a more secure nature. Another would be escrow, but we're not going to be talking about escrow now. But escrow could be a kind of facilities that banks get involved with. Some banks, but most banks do not. The other form or bank facility, which you might know about, is called a bank guarantee. A bank guarantee is a kind of an amount of money that the bank is willing to vouch for you. Let's say the bank gives you a bank guarantee for up to $1 million, and you want to bid on a certain project. That project, you have to show proof of fund about $1 million, and then your bank is going to issue $1 million in guarantee to be able to let you be able to bid on that project and possibly win it. And if you win it, that bank guarantee stay there in the possession of the holder in case you do not perform. So it's a guarantee by the bank that you're going to perform, and if you don't perform, the bank is liable to pay. Now, you can be using part of your bank guarantee facilities or the whole thing in one shot, and that is part of the agreement that you'd have with the bank at the beginning of the year. Besides the bank guarantee, you have overdraft agreement, whereby I'm sure you've heard about the overdraft fee when the bank, when you hit minus, when the bank pays a bill when there's zero in your bank account, and he pays it, and then he charges you $20 a day or $15 a day. It's similar to that, and it's expensive to borrow money in an overdraft form. But the bank offers businesses also overdraft facilities up to a big amount of money, but it is the most expensive form of credit that you can borrow from the bank. Also, you can have long-term debt and you can have short-term debt. And long-term meaning greater than 1 year, and you have short-term debt, which is less than 1 year, in different instruments in different forms that would be extended to you by the bank, so you would be able to run your business. So you'd be able to buy on credit for a short period of time with interest, or to be able to borrow for a long period of time. And this is not a letter of credit. When we're talking about long-term borrowing, we're talking about loans, and those loans, they could mature in 3 years, 5 years, 10 years, 2 years, depending on the agreement with the bank. The bank would give you an amount of money that you can either use in one lump sum or use in different portions in long-term bank facilities. So you would have short-term, long-term. Usually, a line of credit falls within the short-term because it's a year agreement, and also bank guarantees is a year-by-year basis. So this year they offer you a certain amount of money in bank guarantees that you can use. And an overdraft is per year you can overdraft a certain amount of money. So again, we started with a letter of credit is also per year, which they allow you, letters of credit in total amount of this per year to issue your letters of credit. And this would basically transfer to the second year, plus or minus adjustments to your bank agreement that you might have with the bank if you need to do that. So thank you so much for tuning in. This is the episode that I wanted to make, and I've been doing lots of trial and error because this is the first time I broadcast with OBS. I've been using YouTube, but I could not put my logo and a lot of other stuff that I could not have controlled. So OBS is doing a better job for me, but I needed a learning curve that I have spent making those mock videos, and I'm sorry about that, but this is a worthwhile lesson, and I hope you take it and you use it and you broaden your horizons of international trading. It's very important to understand that as you become more successful, everybody want to invest in you. So a little concept to talk about. And after that, I'll let you go. More money makes you more money. So the difficult part is the beginning. So as you cross the beginning line and you are speeding up, you would need less effort to increase your speed. But of course, you need the most effort when you are standstill and running from zero speed. So stay motivated and put a target in front of you and head to it. You're gonna fail so many times, but at the end, all it takes is one win to compensate for all your losses. Thank you so much, and